Hello, folks. Um, this candle right here, I considered a bearish breaker. Highest candle of the day, red, wicked into, round number, put up a fair value gap, respected it, just wicked into it again. I had my entry at the breaker, just 4 micros, and I'm expecting a pretty good pullback. Um, Up to today, if you look at the daily, we typically don't expand the weekly range very much. We did take out the high of the week by a little bit, but prior to that, the weekly range, let's see, this is Monday, Tuesday, Wednesday, Thursday, Friday. So we started here. That's August 1. So that would be last week. So we started here on Monday and we started today. We finished yesterday right there. So a 25% pullback of the week is what you would normally expect on Friday. So I'm going to go ahead and mark that out. You don't usually get an expansion. But that being said, we made an all-time high last Friday. So I'm going to put in there 25% a week. I don't know if I'll need it to run that far down. I may end up getting smoked on this. 25%. I didn't hit the percent. There we go. So that's kind of my target there. If we can get back in the opening range and start trading below it, I'll be real happy with that. I've been having trouble with holding my positions. I've got a little profit. I'm going to lock it in by moving to break even already. We may revisit that deal, but you can see we already put up 2 fair value gaps to the downside, and that's good. We don't have any here really on the way up. We have one right there, and it's already gone through it. So I'm looking for a pullback. This was our original breaker that didn't validate. I mean, candle body's closed, but no fair value gap. So I would like to see it get below that and start putting some fair value gaps up. If you haven't gotten in already, maybe right here would be a good spot. I'll tell you what, I'm going to go ahead and add 2 more right there. If it'll fill me. Come on. There we go. I may get stopped out here. Yep, got stopped out. So I lost a little on that one. I didn't move my stop. I am still very interested in a short position here. We'll see how it reacts around this fair value gap. I would have really liked to have seen some follow through there. So just based on that, we may range here a while. We'll see where it goes from here. I kind of want to get short again, but because of that, we didn't have follow through there, and we went right back to the breaker and right back to this fair value gap. We may poke 700 again here. But do I expect it to make an all-time high again today? No, I don't. Could it? Yes, it certainly could. Right now, we just watch, wait, see what's next. At this point, I'm thinking, I mean, that's our breaker, but I'm thinking here at a low, we pushed high. I'm thinking I'm going to want to see it get below this one before I'd be interested in entering a short again. So I'm going to consider this the run on liquidity most recent, and I want to see it break below there with a fair value gap. This should have went right there. That should have rocketed down. But I have seen it double tap these speedy arrays. So right now I'm thinking right here we need to get below it, push through with a fair value gap, respect it, and then going short to opening range low. Why do I have that line in there? That's opening range low is all the way down here at settlement. So I could see that happening. The 25% of the week is all the way down here at 461, which may or may not happen. But if we can get a fair value gap to the downside here, I will definitely be getting involved. Definitely called the ranginess. The way I view this is market makers are finding willing buyers at a higher price. I have this order to sell up here, but that's really not what I want to do. I want to move it down to my fair value gap should we validate. So I want to see it come below this orange line, fair value gap, respect it, and then start working our way through the opening range. What kind of point values we got there? We did fill the gap before we went up, so it's potential we could continue up. 121 point opening range. The rule there is if we can get a 15-minute candle close back inside of that opening range after leaving it, then we're golden. It will more times than not go all the way through it. I want to show you something pretty fancy here. This little purple line. I went back and did some back testing. Here we opened, we went up, we came down, filled the gap. Very small gap, but we filled it. Sweeping liquidity, creating a bullish breaker. Fair value gap, respected. We get a fill right there, and we hold to that blue line right there. I have seen this transpire many, many times. But you would have to take a trade at just 7 minutes into the open. Yesterday, it would not have worked out. But if you, let's see, where was yesterday's open? It'd be way over here. But if you're patient, like this one here, we swept upper liquidity and then lower liquidity. And that created that blue line from yesterday. So we went up, and then our breaker would be here. We never did have a fair value gap to the downside. So technically you could go long there, but it's better if we validate a breaker. So we swept low, validate, you can get a few points there. You just take the high. And once we did that, that created a breaker here. We don't get a fair value gap till right here. And it gets violated by that guy. But you could technically take a short there. 25-point stop loss would have covered you. But I mean, you're just going to have to be okay with uncertainty. So that high is 19 points. So a 25-point stop loss definitely would have covered you. But that's poking through the bottom of the opening range as well. This one might have been the better one to enter on. But lots of consolidation yesterday. And that's yesterday's low. We've come up quite a bit from yesterday's low. Most of this occurred in the pre-market, I think. No, that's just regular trading hours only. So we went down to yesterday's low. We took out a previous PM low, and then we've gone all the way up to taking out yesterday's high. So I've heard several things about moving on Friday. Don't find a directional move on Friday. If the market hasn't reversed by 11, it probably won't. Well, it did reverse by 11, so we have potential to come all the way back down to 7. Right now, we're just sitting on our hands. And this is not a place you want to get involved in unless you're a range trader. I have the ability to pick the exact candle where the range breaks opposite in my direction. So I've been smoked enough times trading ranges to know I don't want to trade ranges. But you could grab a few points here if you have the discipline to do it once. and stop if you get burned. I don't have that discipline. I've been struggling even to stick to my trading plan here lately. So I know I've got to be real strict with myself. I can blow up a combine in 10 seconds just making mistakes. Come on, you dirty, rotten scoundrel. Go my way. Oh, yeah. Now that's what I'm talking about. We can we can maintain this fair value gap. Right now, we're filling it right back in. But if we can get a fair value gap and respect this breaker here, I'll be in like Flynn. The longest 2 minutes in trading. Will we leave it open? That's 1 minute. Will we respect it? That's the next minute. I'm liking the short here. I really am. I want to jump in already, but I was actually thinking about jumping in up here. But now we got a straight line there. We could go right back to it. Okay, so we left it open. I'm going to go ahead and try to get filled. And it'll be one tick below the high of that candle. That's where I'm going to try to get filled. Oh my gosh, it got right to my. Oh, that's probably it. But that's my entry. I'm probably going to miss it. Maybe not. I don't want to chase here, but I think we're good to go short. I really do. Man, it touched my line. That is frustrating. Even that right there is already 10 points. I'm going to try to get in at the halfway point of this candle here. Right there. Let's see. Oh, it's not going to fail me. Come on, you dirty rat feet. Man, did you see how close that got? Son of a gun. Okay, here we go. All right, there's a halfway point. Now we got to fall out of bed. I got quite a bit of room on my stop. It's above those highs though. We could run these and go straight back up there. That's the risk you got to take. And I want my profit down here around settlement. That's where I'm going to put it. I could put it at the most recent swing lows. See where that would be. Let's put a 15-minute over here. And we'll do a 5. Okay, so if we did that, most recent swing lows, that's $200. $334. full Monty. Let's just do half of the day's range. How about that? I'll use this as our half of the day's range business. Half of the day's range is right here at 617. If we wick out that candle, that's 613. This was our original failed breaker here. Still haven't gotten below it. Let's look at a 15-minute for just a second here. So this will be a 15-minute candle. It needs 9 more minutes to figure out if it's closing back within the opening range. But taking those lows, that's pretty highly likely. I mean, I could take profit there and see what happens next. I think we got more downside potential here. I think we got some serious downside potential. I'm going to put it to the right there for now. And just depending on the aggressiveness of the move, I will, you know what, I'm just going to do it there and I'm going to trail. Go ahead and break even. Oh, this is a sweet one. Purdy, purdy. Man, I'm in it right here at 50, so pulling back to 50, very likely. Pulling back to that wick, likely. We already got some profit on the day, so I'm not going to get too crazy with it. I'll just put it there at 50. Cross fingers that this stays open. We really need this fair value gap to stay open. That wick right there is 45. Above the candle is at 52.75. I'd have to actually take a hit. 52.75. Come on, you dirty rat feet. Fall out of bed. Let's go all the way back down to settlement. Let's go take out yesterday's low. We don't want to see that. We don't want high resistance here. We want low resistance liquidity run. Just rip. Notice the tariff news hasn't really been making the market move that much this week. This is like a nothing burger these days. Come on. This area right here, I think is a good place to take profit. But that one is too. We'll see how it reacts when it pushes through this wick. I might go ahead and kill it and look for another entry. All right, we pushed through hard. Now we're going to pull straight back. Nope, we're continuing down. See how it gets at the 50% mark, working into this 15-minute fair value gap here. Can we get through the 20s? Getting into the 20s. Pushing through all these wicks. Can we keep going? Can we do it? I'm far more impatient in my profit than I am in my drawdown. I'm already wanting to take this off and book that profit. Okay, you're scaring me. I'm just gonna leave it off. I'm not gonna take it off. But it is scaring me. I think I could get wicked out here. Yeah. Let the candle finish at least, Potter. Come on, let it finish. If it finishes green, you can kill it, and that'll be a order block. All right, I'm killing it. I'm gonna regret it, but I'm killing it. So this is the order block here, indicating we could have a pullback, just like at the top here. That's a bearish order block. Last candle up in the run. So that's why I killed it there. And now, if I would have waited for this candle to finish, probably would have been okay. But if this one's going to hold as an order block, this candle body needs to stay above the halfway point of this wick. And of course, not make a new low. But this is an aggressive move. Probably could have made a few more dollars. But I think I made a couple of hundred on that. I'm not going to complain. There, we just now got through those wicks. I might try to enter again. I would think a good place to enter now would be somewhere around here. Possibly this fair value gap right there. But I've been having a problem with that entering and exiting, and I'm up 406 on the day. I don't know. I want to keep my money instead of blowing it all. So we'll just see. If I get a really sweet looking setup, that was my hypo for the day. We go up here, we take out this level, we come back right down to settlement. And so if I could get another entry up here in this area, or even all the way back up to the original little, or the secondary breaker, maybe to here, I would be interested. Like maybe even the top of the opening range. To go short one more time, I might do that. Maybe in, so this is a fair value gap right here. We can move this one down to here. I like that wick as a wick tester. And then our fair value gap would be right here. From blow it up for everybody can see real good. Okay, so from the bottom of this wick to the top of this wick, that's our fair value gap. And you can see we wicked into the halfway point, a little bit higher than the halfway point. And that is a downside, so it actually needs to be a different color. We'll make it that color. And so coming back into this before continuing down, since we did run some liquidity there, either we're going to respect it or we're not. But I'm not interested in entering this low in the liquidity run. I want to see a pullback to the upside. Maybe even get everybody convinced, oh, we pulled back to the 50% mark of the day's range, and now we're going to the moon. That's the narrative I expect market makers to paint, the picture I would expect them to paint. There is another fair value gap right here. You see, our original breaker is here. And there's a fair value gap right here with relative equal highs. So that one could also be a potential pullback. So that's our original breaker, secondary breaker, and then this is the breaker between two highs. So either of those points could be points of reversal here and here. If you listen to ICT, when he calls a breaker, it's not what I call a breaker. I call this a breaker. He calls this only. That's the only breaker. When candle bodies start closing below this, because it's the low point between two highs, that would be the breaker. And so that's where we should have got short right there for a push down when we got 20 points. If you're trading minis, you know that 20 points is $400. I'm not. I've been getting my butt handed to me too much to trade minis right now, and it's not because I'm. It's because I'm not trading my system. It's because I'm taking stupid trades. Like right here, I might try to jump in and guess which direction it's going next, and you just simply can't do that. You might get lucky sometimes, but you will not be consistent with it. And that's what I've been doing is taking trades in an area like this, saying, "Oh, yeah, I think we're going to continue down and take this wick," and then it goes all the way to the moon, and then I'm like, "Oh, well, I guess we're going high," and so I go long, and it goes, it takes that wick. I've just been doing stupid stuff like that. I'm sure you can relate. We'll let this one fester a while. We could rip all the way back down to the settlement and then come back to the middle of the day, middle of the opening range. Or we could go to the 25% retrace of the week. From here, it's going to have to be a real nice setup because I already got my money and I want to keep it. Yeah, just what I want to see. Let's convince everybody that we're going to make a brand new all-time high on a Friday. Back to the high of the opening range. We've gotten through this fair value gap. This entire breaker is in play. If we can stay below the high of it with candle bodies, I might try one more trade. I'm going to go ahead and put in an order way the heck up here to sell for. Now move it into place where I need to. Sorry about that. Oh, yeah. If we get past this breaker with candle bodies, then we could potentially go to the moon. That's a lot of lines, I realize. Let me get rid of this one. We'll just use this one as our potential breaker here. We could wick into that fair value gap right there for sure. And we have those I'm going to get rid of this. It's messing me up. When we have these relative equal highs here, that fair value gap is the first pull away from this breaker on this downward move. This one failed, so this will be our fair value gap of importance. If we can get it respected and maintain candle bodies below this red candle right here, and I will be moving this down to a suitable location for entry. Adam, did you get in? That was a nice long. So we can look, I'm not looking for longs, but breakers right here for the upside breaker. Me to key the last up close candle before the run on liquidity right there. We put up a fair value gap, but we did not get an entry yet because we got to come back down to one tick above one of these candles. We didn't come back down to it yet. So I would not be in the trade yet unless I tried a halfway point like I did on this one up here. So this is our entire breaker as ICT would define it. The lowest point between the two highs. It's looking like we're going to push through it, but I think this little fair value gap right here is the one that we really need to keep an eye on for more downside. Now we've come back inside the opening range and then left it again. But from a 15-minute perspective, which is over here, man, this is really going to the moon. I hope Adam's still in this. So this one isn't really helping us much. Let's wait for this candle to finish. If it gets violated completely with candle bodies, and we'll just go for another one. Okay, so we respected it with candle bodies so far. We didn't respect the halfway point. I don't like seeing that, but we haven't completely closed it. We haven't had anything close above it yet. So it's still in play, but not looking too pretty. And still, we have not had an opportunity to enter this run. We haven't had any pullback. Volume imbalance right here. You see that? Where those candle bodies do not meet, that's a volume imbalance. I've seen it trade back to those and then fall out of bed. If I was being super risky, I would put an order there, trying to get a little pullback. So now we've had a candle body close above this fair value gap, so it's no longer in play. The one I deleted earlier is the only one we have left in play here. We have this one, but it already got violated. The only one that's still holding up is this one right here. It runs from the bottom of this candle, make sure I'm in the right spot. Yeah, the bottom of this green candle to the top of this red candle. And we did respect it with the candle bodies. We could go wicking back into it. And this would be our bearish border block. It can also be treated as a kind of like a fair value gap in itself. See how the candle bodies respected the halfway point a bit? That was my indication to go short here, but I just took a short to 80, and then that was it. I also went short here when we validated that guy and got smoked. So that's our first breaker. Our original fair value gap. That's quite a move. If you'd have taken it, still don't see an entry on this one. No opportunity to get filled here. No, 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 no. So you still haven't had an opportunity to get filled. These two highs, relative equal on the 15-minute. Big liquidity draw. We may end up trading higher today. We do have this draw on liquidity up here. Let's look at it on a 4-hour perspective. That's a little higher than I should have had it. There we go. That's the 1 minute. Just try to poke those highs. I want to see how it reacts here. We might be pulling this guy back down. Did we take it? 678.50, 681, 681.75, 681.75, 681.75. So those three are all dead equal right there. If we don't take them now, then we're going to revisit them. Three equal highs. And you can see it here also 81.75, 81.75. This is actually 81.50 on this one. So we haven't taken these two out. This is our first opportunity to enter this run because we would need to be a tick above the low of this candle. And it didn't get there. The low of that candle is 73.75. So you wouldn't even get 10 points on the finality of that run. Assuming that it's stopping at 81.75. Might be worth a trade. I see you didn't get filled there. I'm glad you didn't get filled. I might have been a chasing son of a gun on that one, but I'm being very, very patient here. Still, we didn't pop those highs. So we went back in the opening range with a 15-minute candle, but we didn't close inside the opening range. That's the key. It has to close back inside the opening range. And we didn't. 652. I'm going to put it over here. Copy. Paste. Just so we know, we can see where it is on both charts. Still hadn't popped those highs. Oh, what's going to happen? This suspense is killing me. I'm tempted because I think it's going to be respected to move my entry down here right above those highs. But I want to see what happens when they're hit. I'm going to be patient. If we're looking at the order block as our breaker, it's right here. So we could go all the way up. Ooh, look at there. There we pop some highs. Now what's going to happen? That's the base of our order block right here. Now, to the tick touch of that sucker would be hard to resist. Really still didn't have an entry on this run up. Not a single entry. No pullbacks. Dead even. 90 and 90. There we go. Now touch that to the tick, fall out of bed. Respecting this fair value gap at the same time. Oh, I want to jump in, but it could keep going higher, so I'm not gonna. So at this point, this one's toast. So now all we have is the breaker, and we need to respect the halfway point a bit. Order block, bearish order block, which is this big red candle we have highlighted here. And the wicks don't have to respect the halfway point. That's our order block. The wicks don't have to respect it, but the bodies do. The bodies need to respect the halfway point. And then, of course, we would still need our fair value gap to the downside and an entry for it to be a valid trade. This is about to fill me. I've got to put it up a little higher here because I don't want to go short there. If it does just start ripping through there, so we could go to the moon. I think just to be safe, I'm going to take it off for right now. I'm glad I noticed that. Oh, oh, what's happening here? Hmm, respected order block. Surely you're not going to get that close to 700 and not tap it. What was the high of the day? 703. Can we get a fair value gap to the downside off of this bearish order block? Or will we violate it and continue to the all-time high? That's another. I wonder this 15-minute wick and that order block. It's 86.92. Staying above below the 50% mark of that wick is also indication of more downside. I'm liking this. I am liking it. I'm gonna take a chance, guys. I might get smoked here, but I'm gonna take a chance. I'm just gonna keep my stop real tight here. 25% right there. 90 might not get filled. That's a volume imbalance right there. It's at 87. Try 87.75 there. All right, I'm in like Flynn. Move my stop down to the high of that candle right there. If we go through that, then we're done so anyway. That's $78 risked. I don't know if I'd copy me on this because this is a fair value gap to the upside that has been respected. So I don't know for sure. This is just because of my bias for the day that we're going back down there to settlement. That's the only reason I'm in on this trade, not because the chart's telling me, hey, we need to get in. We're going short. I just, I like this PD array. I like my hypo that we're going back to settlement on a Friday. So that's why I'm in. I do not recommend this. You get in here. But it's one of those, I've seen it happen. I've been in a long expecting for the round number to get taken in this same situation multiple times and got smoked. So, yeah, that also is playing into my decision making here. And maybe I don't expect a complete pullback all the way to settlement here. Maybe I just grab 20 points because, you know, coming down here and give us an offer at this volume imbalance or something, that might be a possibility. And we just take profit there, like somewhere around this wick, something like that. But I like it. Relative equal lows there, middle of the range, middle of the day's range. If this works out, I'm gonna be pretty happy. But if it doesn't work out, I'm not gonna be real sad because I only got $70 on it. I think it's time to cook an omelet. What do y'all think? If I sit here and watch it, I might do something stupid like get nervous. Well, that didn't work out. We are still respecting it with candle bodies, however, but we did make a new high of the day. So now what do? I know what I do because now I've lost a trade. Um, that pulled a little bit out of my total for the day. I think it was worth a try, but I'm up 329 on the day. If we reverse here, I might go ahead and take a short if we can put up a nice reversal signal. But all of this stuff that we have on the chart now, I mean, this one's still kind of in play. We have a new one now because it's a order block right here. It turned red, finished red. So if we were to continue down from here with a fair value gap, that could possibly be serving as an order block. It is on a Friday. It is a directional day. This is the breaker there, or you could go the low point between two highs and make it all the way down here if you want to be more conservative. But right now, to me, because this was so aggressive, this was your only entry, and just into the volume imbalance, that would be your only entry on this whole run up. It just feels like a liquidity run to me. And then we're going to range today. But so far, all of my PD arrays that I had marked out as points of contention that we shouldn't get through, they've been gotten through. So the whole directional Friday thing, we could be offering up to here. I don't think I'm going to continue to live stream. I don't believe I'll be taking a trade anytime soon because the time of day is wrong. It is 12:19 right now. I mean, technically 12:30 if that one validated. We could see a pullback. But I don't know. I think I'm just going to keep the profit I made, go into Monday with a little bit of a boost in the old pocket, and just be happy with what I got. Any day you can take money out of the market's a good day. I appreciate y'all watching. Hope you learned a little something, something. And I guess I'll see y'all next time. Be watching for that return down to here. It could possibly happen. Right now, this is the breaker that would need to be validated. But it may not happen. We may continue to trend higher. We've been in an extremely bullish week, so we could continue to go higher. So just don't take any unnecessary risks. The reversal patterns are good. So trade those. Leave everything else alone. Talk to you next time.